So we'll be going over IRS Schedule 1, which is the part of your income tax return that reports additional income and adjustments to income not found elsewhere on your tax form. So for Form 1040 filers, there are certain items of income, such as wage income, that you would put directly on your tax return. There are certain tax deductions that you would put on different schedules. However, these are items of additional income not found directly on your Form 1040, and then adjustments to income that you would not find on Schedule A. So we'll go through each of these in order, and we'll talk about where you can get more information on each of the tax forms that feeds a particular line item. So we'll start at the top. But before we get into the depth of this, we have the IRS breaks this up into two parts. There's the additional income, which represents the increase in taxes. And then part two is the adjustments to income, which lowers your gross income or adjusted gross income, known as AGI. So let's go ahead and start with the section at the very top of the form above part one. So your tax prep software will probably auto-populate your name, social security number from the rest of your tax return. But there's a relatively new field here since we last did this video, and it's for items that are reported as sales on IRS Form 1099-K. Form 1099-K is a relatively newer tax form that most people who sell items on eBay or Facebook Marketplace or online should be aware of. The IRS rolled this out a couple of years ago, but they're starting to force electronic payment merchants such as PayPal, eBay, merchant sellers that are online. They're starting to force them to lower the threshold, the reporting threshold. So I believe in 2023, the dollar amount, there was a dollar amount and a number of transaction threshold. So only people that sold more than $20,000 worth of merchandise received a Form 1099-K. I believe for 2024 that threshold is $5,000. The ultimate goal for the IRS is to make that a $600 goal, so that everyone that sells $600 or more of something through one third-party payment network, such as Stripe or Square or whatever is out there, would receive a Form 1099-K. I've received a lot of questions about what to do with these transactions. So at the top of Schedule 1, there is a space for dollar amounts that were reported either in error or personal items that were sold at a loss. So this is important for people to pay attention to because I received a question just the other day on how to report personal items that you sold for a loss, because you can't write them off on your tax return. But at the same time, if it's reported to the IRS that you earned, let's say $1,000 here, then the IRS is going to expect you to explain that. And if you can't explain that elsewhere, then you're going to end up having to pay taxes on it. So the question that I received was, if I sold something that was a personal item and it was a loss, why am I receiving a 1099-K? Well, the 1099-K is what the payment processor is required to issue to you. But the more important question is, do I have to pay taxes on it? And this is the area where you get to put that information in to inform the IRS that you shouldn't be paying taxes. So again, either a mistake from the payment processor or an example from the IRS instructions. Let's imagine that you bought a couch a long time ago for $2,000. You've had it for a couple of years, and last year you sold it for $1,000. Now you probably will get a Form 1099-K for $1,000 from the merchant that processed your transaction. Like if you sold it on Facebook Marketplace, or someone that takes electronic payments. So I don't know, Venmo or something. So let's imagine that you get that payment and you get a 1099. What do you do with it? Well, you shouldn't pay taxes on it. You would put that information right here. That flags the IRS to let you know that this is not, something that's taxable income. So I believe that the IRS is still collecting this information so they can figure out, what kind of situations taxpayers are encountering, and they'll put out further guidance and while trying to allow people, forgiveness or grace for things that are beyond their control. The IRS also wants to make sure that people that are selling items for capital gains that are actually earning money through this are reporting and paying a proper share of taxes. So if you paid $2,000 and you sold it for $1,000, that's clearly a loss. You can't deduct that if it's a personal item on your tax return, but you can report it right here at the top of your Schedule 1. And then that lets the IRS know that you shouldn't be paying income tax on that money, even though it's reported to them on a Form 1099. There are several other examples of things that were reported in error. What happens if you get multiple 1099-K forms? How do you balance that out? And we do cover that in a little bit more detail in our article. So feel free to check that out. It's in the section right above Part 1. So in this case, we put $1,000 for John Doe. That's not going to factor into our calculation, but it does let the IRS know that John Doe's 1099-K really isn't a taxable event. So now we're going to go step by step through Part 1. For simplicity's sake, I've marked all of these dollar values for at $1,000 each. The emphasis of this video is not necessarily to do the math here. It's to kind of walk you through where you can get the forms from or what you should be expecting in terms of additional documentation. And remember that Schedule 1 is kind of a summary form. So this is a compilation of all the items of additional income. And we're going to go through each line so you can figure out what form you should be expecting with that. So let's start with line 1. This would be taxable refunds, credits, or offsets of state and local income taxes. So this would be something like if you received a local income tax refund, you may be required to report that amount. So, and you would know this if you received a Form 1099-G. The G is for government payments. By the way, in the show notes, I will put links to resources that include articles and videos we've created and updated for each of the forms mentioned here. So you don't necessarily have to take notes on every single thing. Just if there's a tax form mentioned here, odds are likely we're going to put it in the show notes. In line 2A, for certain marriages where the divorce was finalized on or before December 31st, 2018, alimony that's received is reported as taxable income. Alimony that is paid for a divorce after December 31st, 2018, or on or before December 31st, 2018. If that divorce was finalized before then the person paying alimony gets to write that off under Part 2. So for anything 2019 and later, if a divorce was finalized after January 1st, 2019, then none of that is taxable income. It's not taxable income to the recipient, and it's not a tax write-off to the person that pays it. So in this case, January 1st, 2010, this is clearly in bounds in terms of the additional income aspect. Line 3, business income or loss from a sole proprietorship. So Schedule C is the proper schedule. That literally is the profit or loss statement for a sole proprietorship. Other losses or gains. So if you sold or exchanged assets that you used in a trade or a business, then you would complete IRS form 4797 and then report that dollar amount here. In line 5, we're talking about rental real estate, royalties, partnerships, S corporations, trusts. So for that would require Schedule E, supplemental income. You would attach Schedule E and then report that line item here. For farmers, farm income or loss, that goes on Schedule F. That goes right here in line 6. Unemployment compensation, you would receive a copy of IRS Form 1099-G. Box 1 would show you the total unemployment compensation amount paid to you in the tax year. That's the number that would go in line 7. In line 8, in 8A, there's a net operating loss. So this is a relatively new development. It used to be reported on Schedule either A or B of IRS Form 1045. That is kind of going away. There is a new tax form that's still, at the time of this recording, has not been finalized. IRS Form 172. That's the net operating loss deduction. So you can enter any deduction for a net operating loss from an earlier year. And you would put that in this field that has the parentheses that has the net effect of subtracting from all of these items of income. Gambling income on line 8B, you would receive most likely a form W2G that would report your gambling income. You can report gambling losses, not on Schedule 1, but on Schedule A. You would have to itemize losses on Schedule A to be able to be eligible for any gambling loss deduction. And you can only report a gambling loss up to the amount of your gambling profit. So if I was a deadbeat, just out of my luck gambler, and I spent $10,000 in gambling last year, and I only was able to earn $1,000, well, then my maximum gambling income or deduction on Schedule A would be $1,000. The rest of it would not be deductible. Line 8C, you're going to report cancellation of debt. That would be reported to you on IRS Form 1099-C. Some or all of that debt may be non-taxable. There are further instructions in our article that you can look at to drill into more detail about whether or not your debt cancellation is a taxable event. In line 8D, there's a negative adjustment item for foreign earned income exclusion and the housing exclusion, which you would find in IRS Form 2555. So you would enter the amount of your exclusion from line 45 of that form, and that would be subtracted from the other items of income listed in this column here. You may need to complete the foreign earned income tax worksheet that you can find in the form instructions. So there are also worksheets that need to be that may need to be completed. For example, in line 1 of Schedule 1, the state and local income tax refund worksheet. If there's a worksheet, odds are likely we've created a video for that. So if I run out of room in the show notes, I won't be able to put a link to the video, but you can type in Schedule 1 in the search bar on the YouTube channel, and you should see the appropriate worksheet. So there's a state and local income tax refund worksheet. There's also a foreign earned income tax worksheet that you can find simply by hitting the search bar. So again, I'll try and put as many links in the show notes as possible, but we do have a lot of resources and a lot of links, so I might run out of space before I can do that. In line 8E, we're going to talk about income from IRS Form 8853. So this is taxable income from a distribution from a Archer MSA or a Medicare Advantage MSA. So those are medical savings accounts. Those are the precursors to health savings accounts. So if you have a taxable distribution that gets reported here, you would have to complete IRS Form 8853 to determine how much, if any, of your distribution is taxable. If you do it the way intended, where your distributions are solely for qualified medical expenses, then you may not have anything to report in this line here. And then IRS Form 8889 is the exact same thing for health savings accounts. So in this case, John Doe has a health savings account. Let's say he took out $5,000 of distributions, but he only had $4,000 of medical expenses. He would report $1,000 of additional income right here. And then same with the IRS Form 8889 for health savings accounts. So you may need to pay an additional tax if you do have this. That would be on, I believe, IRS Form 5329 if you have taxable events that you're reporting here. So I'll put links to that in the show notes. If you received any Alaska Permanent Fund dividends, you would report them in line 8G. Jury duty pay. So if you served on jury duty, you would enter that in line 8H. Prizes and awards. So you would enter the dollar amount of any prizes and awards, but you would actually follow the instructions for line 8M. You would probably receive a Form 1099-MISC, which I'll put a link to in the show notes. And basically, you would follow the instructions in line 8M, which applies to Olympic and Paralympic medals. Basically, you're reporting that income. Those amounts should be in box 3. There's a separate treatment for Olympic and Paralympic medals and Olympic prize money, so we'll get to that in just a moment. Let's see. Line 8J, money that you received as part of an activity where you weren't engaged for profit income. You can find more details in IRS publication 525, but that's not really that common of an event. So we'll kind of leave that out of the discussion. Just know that if that applies, it would go right here. Line 8K is the income from the exercise of stock options that were not otherwise reported on your Form 1040 or 1040 SR line 1H. Line 8L is the income that you might have had from the rental of personal property if you engaged in the rental for profit, but you weren't in the business of renting that property. So let's imagine that you're a homeowner, or renting a house out, and you had planned to put your furniture in storage, but your tenant worked out a deal where you agreed to rent that furniture to them for an additional $100 a month. That's personal property, so you would report that income. Again, if you were engaged in that rental for profit, but you're not really in the business of renting couches and furniture and stuff like that. Line 8M, we talked a little bit about it. Basically, if you're an Olympic athlete and your adjusted gross income is less than $1 million, then technically anything you report here is going to be non-taxable income. You should include the amount that's on your Form 1099 MISC here, and then you would subtract it on line 24C up here. So basically it's a wash, the non-taxable amount. So again, for those Olympic athletes or Paralympic athletes that have an adjusted gross income of less than $1 million, $500,000 if you're married filing separate returns. Section 951A exclusion or inclusion. This pertains to controlled foreign corporations. So my guess is that you either know about this or this does not apply to you. But if it does apply to you, then you would be entering amounts from IRS Form 5471. And our article has a little bit more detail on that. And then line 80 is the section 951AA inclusion. And this is the global intangible low taxed income known as GILTI tax. So that corresponds to IRS Form 8992. So again, it either doesn't apply to you at all or it does apply, and you would be entering amounts from IRS Form 8992. Each of those forms that we're mentioning here will tell you exactly which part of that form you're reporting onto Schedule 1. And so you can just look up that form. Internal Revenue Code 461L, Excess Business Loss Adjustment. You would be completing a form 461 to report that. And then that's the number you would put here. Taxable distributions from an ABLE account. So an ABLE account is a special form for a designated beneficiary with qualified disability expenses, basically to allow people to receive tax preferred or tax free income while still qualifying for certain state programs designed to help them. So if you're familiar with an ABLE account, anything that you distribute for the benefit of that beneficiary that's a qualified expense would not be a taxable distribution. Any taxable distributions would be treated in a similar manner as the MSA and HSA income, and may also be subject to additional taxes on IRS Form 5329. Scholarships and fellowship grants not otherwise reported on your W-2. There may be situations in which that's taxable income. So we won't go into a whole heck of a lot of detail here, but let's imagine that if you were a degree candidate, you would only include the amounts that you used for expenses outside of tuition and course-related expenses. So room and board or travel, you would enter those amounts here because the tax treatment covers direct education costs, not necessarily room and board. Line 8S would be the non-taxable amount of Medicaid waiver payments that were included on your Form 1040. This is a negative adjustment. This would be reported to you in IRS on your W-2 form in box 12 with the code II, so like a double I, or looks like maybe Roman numeral 2, depending on how your form is typed out. So you would put that information here. And line 8T, this is your pension or annuity from a non-qualified deferred compensation plan or a non-governmental Section 457 plan. This would be reported on your box 11 of your W-2. If that's blank, you may need to contact your employer. Let's see. Line 8U, wages that you earned while incarcerated. Believe it or not, inmates do receive either a W-2 or a Form 1099. So you might receive that, and that's where you would report that on your tax return. Relatively new item, line 8B, digital assets that were received as ordinary income that you did not report elsewhere. So if you reported digital assets on, let's say that you reported digital assets that you sold for a gain on your Schedule D or your 8949. That's not what we're talking about here. We're talking about if you earned $50,000, but you received it in crypto, and or you had, a Bitcoin mining that produced $50,000 of Bitcoin in a year. You would report that right here in 8V. And then line 8Z is a placeholder for a wide range of other types of income. We're not going to go into detail about all of these. We'll just, because a lot of them are kind of relatively unknown. So taxable part of disaster relief payments, dividends on insurance policies that exceed the total of premiums reported during the year. There's a lot of other income items. If you want more detail, you can check out the article. We go through all of that, and we just updated that last week. So in that case, we put 0. And now we're gonna first total all the items in this column right here for line 8, lines 8A through 8Z. We put that in line 9, so $16,000, and then we're gonna add that to the rest of the items here, but not this item here, and we get $23,000. This is additional income. It's an adjustment. It's an increase in AGI, but what this does, because it's not reported as wage income, then you're not calculating Social Security or Medicare tax on this. So it's additional income that you report at the top or on Schedule 1. And now we're going to go through all the different adjustments to income that will drop your AGI back down. So again, adjustments to income mean that these are adjustments that arrive at a lower AGI. And AGI has a lot of applications for other tax situations. So Roth IRA contribution eligibility depends on being below a certain AGI threshold. For people that are on Medicare, paying what's known as IRMA, which is basically a surtax or an income adjustment to your Medicare premiums, that's dependent on your AGI. So any adjustments that lower your AGI are a good thing because it makes you more eligible for certain tax preference items. So there are certain items of non-taxable income, real quick, that you would not report here. Things like child support has never been taxable income. It's never been a tax write-off before or after the tax law that changed alimony treatment. Life insurance proceeds. There are certain owner-employed life insurance policies where the proceeds may be taxable. For the most part, if you took out a life insurance policy for your spouse, that is not taxable income. There might be interest that's considered taxable income, but that's not the insurance proceeds themselves. And then gifts and bequests. None of those are considered taxable income. So now adjustments to income, we'll go through step by step, just like we just did. So line 11, educator expenses. This is for eligible educators, generally K through 12 teachers, instructors, principals, or an aide that worked in a school for at least 900 hours during a tax year. So you can't claim more than $300 worth of these expenses as an adjustment to income. Again, I put this $1,000 as a placeholder. So if there were 2 teachers and each of them were able to claim the maximum of $300, then you would only be able to put a maximum of $600 under educator expenses here. And so the $1,000 is a placeholder, but realistically, this should be not more than $300 for a single person or $600 for two teachers that are married to each other. And qualified expenses could be professional development courses that you took to improve your ability to teach the curriculum. It has to be directly related to the curriculum you teach, or connection with books or supplies or equipment that you bought for use in the classroom, and it has to be above and beyond any expenses that you're reimbursed for. So you can't really deduct. You can't deduct, or you can't deduct as an adjustment to income any education expenses that you were already reimbursed for. Certain business expenses. So there's a form, IRS form 2106. If you're a reservist in the armed forces, this is the form that you would complete to claim travel expenses related to your drilling or guard duty. Performing artists and then fee basis officials all have the ability to claim certain business expenses on IRS form 2106. That would be attached to Schedule 1, and you would put the dollar amount here. Health savings account deduction. So you can take the deduction if you made contributions to your HSA. Again, you would follow the instructions on your form 8889 and then report that adjustment on line 13. Moving expenses for members of the armed forces. So members of the armed forces that are moving due to PCS orders, permanent change of station orders, that force them to relocate at least 50 miles from their first residence, they're able to document any unreimbursed moving expenses and then attach this IRS form 3903. My personal experience, I spent 24 years in the United States Navy, and I never really had to pay out of pocket for any moving expenses. However, that's my story. So I've never completed IRS form 3903. I do know other people that for some reason, maybe made a claim for expenses that wasn't approved or did something in a way that wasn't, kosher with whatever their service regulations said. So they didn't get reimbursed. You can at least get the tax deduction. And again, this is anything that's on Schedule 1 as a tax adjustment is preferable to anything that you would report on Schedule A. So these are all things that you can take, whether you take the standard or itemize your deductions. If you're self-employed and you're completing Schedule SE, there's a part of that schedule that has to do with the deductible part of your self-employment tax. So if you are your own employer, the bad news is you have to pay both sides of the Federal Insurance Contributions Act, or FICA, which is Social Security and Medicare. The good news is that you get to deduct the employer's part of that. You would put that right here. So attach your Schedule SE to this. Self-employed retirement plans, so qualified solo 401k, a SEP IRA, or a simple IRA. Any of those contributions would go right here. Your self-employed health insurance deduction would go on line 17. And again, I'm giving you the basics here. We do drill down into more detail. There happens to be a deduction worksheet for the health insurance deduction, so you can check out our resources on that as well. Line 18, if you paid a penalty on the early withdrawal of savings, like say maybe you cashed in a CD and you had to pay a penalty, you can deduct that penalty as a Schedule 1 adjustment to income. You would see that reported on your Form 1099 INT or 1099-OID, original issue discount. If you paid alimony, and again, that divorce was finalized before December or on or before December 31st, 2018, then you can write that off here. You would enter the recipient who should be reporting that on his or her tax return. And again, the IRS will kind of look at this and then cross-reference this with the other person's tax return to make sure that this matches up. So that's kind of the IRS's way of checking on this. And again, if there was a divorce that was finalized before December 31st, 2018, you can write off the alimony paid. If it's afterwards, then you can't. Conversely, the person, would either be able to report it or would have to report it as income if it's before that due date, and doesn't have to declare it as income after that date. People want to know how they deduct their IRA contributions. That's line 20 right here. Now, if you make a non-deductible contribution or a Roth IRA contribution, you can't deduct it here. So non-deductible contributions are reported on IRS Form 8606. And there is an IRA contribution worksheet located in the Schedule 1 instructions. We'll put a resource we have a video on that as well. Let's see, student loan interest deduction. So for certain persons that have a modified adjusted gross income of less than $95,000 for single or head of household, or $195,000 for married filing jointly, if you had student loan interest and you're not able, or no one else can claim you as a dependent, then you can calculate another student loan interest worksheet and determine how much of that interest that you can enter as a tax deduction here. So generally speaking, there's a certain dollar limit that applies, and so it's up to $2,500 per year. You also, this is for the student loan interest, so not student loan payments. Make sure that you clarify that. You should receive a Form 1098 that is reported to you. And that's where you would report that student loan interest. Let's see. Line 22 is reserved for future use. Line 23 is the deduction for an Archer MSA. Very similar in principle to the health savings account deduction. And then there's a whole list of adjustments to income. So we'll go through this fairly briefly. If you turned around and gave your jury duty pay to your employer, you don't have to pay taxes on it. You can write that off. Some employers let people keep their jury duty pay. Others say, hey, we're paying you, so give us any money that the courthouse gave you. Give it to us. So if you give it back to your employer, you're not paying taxes on it if you report it on line 24A. So in this case, this would be a wash with line 8H up here. They would cancel each other out. Deductible expenses related to the income that was reported on line 8L from the rental of your personal property. Again, if you made $1,000, but you had to spend $1,000 because your tenant was, wanted to rent the furniture from you, so you went out and bought furniture and then you made it money back, you can write off the amount that you paid for that. Deductible expenses related to that. Those Olympians get to report the non-taxable amount, again, up to $1 million, unless you're filing a separate return, then up to $500,000. There's a lot of other things, reforestation, amortization, and expenses. You would use IRS Form 4562. That's the depreciation and amortization tax form. Line 24E is the repayment of supplemental unemployment benefits under the Trade Act of 1974. If you're familiar with that, then congratulations, you're a better person than me. Line 24F That is contributions to a 501c 18D pension plan. And then certain chaplains have the ability to deduct their contributions under to a 403B plan. If you had an unlawful discrimination claim, you can enter court costs and attorney fees as a deduction, but only to the extent that you had gross income from it. So kind of like the gambling, you can make some money, you can write off all the money that you spent on that, but you do have to you can't claim more in expenses than what you actually receive. So you'll get a tax break, but you're not going to get a complete tax write-off. 24I, these are attorney fees and court costs that you paid in connection with an award from the IRS for information about tax fraud or tax law violations. So you can become a whistleblower, and if you had to pay for certain documents or whatever, then you can include those fees here. The housing deduction from IRS Form 2555 is not the exclusion, it's the housing deduction. And then excess deductions of Section 67E expenses on your K-1. This would apply to Form 1041, which is for estates and trusts. And then other adjustments, which there isn't a whole lot of guidance in the Schedule 1 instructions. Specifically, the instructions say leave line 24Z blank. So we will total up everything here. So we get $11,000, and then we add that to the other adjustments to income here for a total of $23,000. These are the adjustments to income that you report on line 10. Conversely, the additional income is on line 8 of your Form 1040. So I think that's all we have for this Schedule 1. It is a lot. There's a lot of information that's not here, so you can check out our article. You can also check out the videos and articles we've put together for all the different forms mentioned here. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's another topic that you'd like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.